Thanks, Cheryl, and hi, good morning to all of our viewers as well. Yes, United Spirits, the stock price continues to go higher today as well in trade. Fourth quarter numbers definitely did get the streets saying cheers to the company. In fact, let's take forward all that happened in Q4 and what can we expect going forward in the brand new fiscal year as well. We have with us a very special guest, Anand Kripalu. He's the MD and CEO of Diageo India. Mr. Kripalu, really appreciate you taking out time and joining us today on the show. Thanks so much. To start with, Mr. Kripalu, I must ask you about the massive growth seen in the top line. Very impressive indeed. I mean, in the corresponding quarter, you of course did have that one-off, bulk sale of the Scotch inventory. Despite that, your top line has grown 12%. The P&A segment revenue volumes have grown in a great manner. Now, again, the question that arises over here is that the base quarter was a little weakish, despite that one-off sale. So how much of this, superb double-digit growth has actually been on account of, maybe a low base, and what sort of inherent recovery in demand you saw in Q4?
Sure. First of all, thank you for having me on the program. It's a pleasure to join you and talk about our company. So, I'm particularly pleased with our last quarter's numbers. They were very, very strong. As you said, yes, we were lapping a somewhat soft quarter. If I remove the bulk Scotch sales and the fact that there was a kind of national lockdown for about a week towards the end of the base quarter that we're talking of. Despite that, I'm very pleased with our numbers, both on revenue, margin, as well as cash. Now, I think the thing about our industry and our category is, and that's what's demonstrated in this quarter, is its resilience. This quarter, pretty much everything was open, right? Retail was open, bars were open, albeit with low footfalls. And of course, the big weddings and banquets didn't happen, but that was substituted with a lot of, I would say, small social gatherings in home. But this just tells you the consumer stickiness of this category and its resilience. And I believe it demonstrates that, when you have peace times, when the waters are calm, the ability to grow double digit is absolutely something that this business can do consistently.
All right. Well, Mr. Kripalu, my next question is going to be taking forward from what we saw in that last week of March, the second wave, which led to localized lockdowns. Once again, bars, restaurants, even in that limited capacity that they were operating at, had to be now completely shut down. What's been the impact that you have seen so far? And do you think that the off-trade channels, given the experience that we've seen in the last 1 year, have strengthened enough to be able to compensate for the loss of revenues coming in, on account of the shutdown of the HoReCa segment?
Well, so it's like this now. We've been through that first wave. We learned a few things because none of us had dealt with a crisis of this magnitude in our careers, I would say. We've seen sales going up and down, but we had never seen zero sales that we had for 5 or 6 weeks of the national lockdown, and when you're sitting with large overheads, that's a big challenge. And as things had started improving, we've obviously seen in now the few recent weeks some challenges again. So the question is, what do? First is you focus on what you can do, right? Forget your circle of concern for a moment, focus on what you can do. And we took a decision that whatever happens, we will emerge stronger from this crisis. And I absolutely want to call out the significant contributions that we have made towards COVID relief, right? Totaling up to getting close to about 130 crores during this period as a corporate between Diageo PLC and locally in support of the communities within which we operate. And I'm really proud about the fact that we did that. So emerging stronger in terms of our corporate reputation and also emerging stronger competitively. And I'd like to believe that each quarter in the last fiscal, we have performed competitively, which means we have outperformed our competitors. Now, the way it's going now, the off-trade does compensate for a good part of the on-trade because the socializing that happens in the pubs and bars and restaurants tends to start happening at home. And, the silver lining is that people have discovered that it is actually cheaper to drink at home. You can even drink better right? And we are finding that. But it doesn't ever fully compensate, right? The on-trade is somewhere between 20 and 25% of our business, and it never fully compensates for those big Indian weddings or those big celebrations and banquets, which are large consumption occasions. But I would say that what we have seen is that a good part of it does get compensated. And because of the value of trading that we're seeing with really the strongest growth in our portfolio coming from Scotch whisky, and within that, our bottled in origin scotches like Johnny Walker and so on, right? In value terms, I think it tends to start compensating to a large extent.
Okay. I would like to ask you about the margins because, that's as well, I think pleasantly surprised the street quite significantly. There's been a better product mix for sure because your P&A segment has grown very well. But you've mentioned benign commodity costs as well. At a time when we are seeing inflation across the spectrum of commodities, do you still see that be the case, in April, in May? Do you see any sort of, increase in costs, whether it's in some of your raw materials or even in packaging for that matter?
So you're absolutely right. Commodities have been largely benign, I would say, over the last year, and that's obviously helped. And we have combined that with aggressive management-led productivity to ensure that you're able to save, extract costs, and that has helped our margin performance as well. Now, this current quarter, commodities seem okay for now. But having said that, commodities in general in our industry, if you go back, over a long period of time, tends to be 4-ish%, right, on aggregate. And the biggest commodities for us are really extra neutral alcohol and glass. And, so I think we've got to expect that there will be some level of inflation that will come in after a benign year. And but we will keep, of course, focusing on what we can do, which is management-led productivity, to cushion and neutralize at least half of the inflation, if not more.
All right. I wanted to ask you about what you saw in West Bengal, in Andhra Pradesh as well, because I think those states, you did see slower revenue growth. In fact, I think it's one of the reasons why your popular segment showed a bit of a decline in growth in volume terms. How long do you think
Sorry, I think I've lost you. Hello?
Right. Mr. Kripalu, Mubina is having a patchy line. This is Cheryl also joining in. And I believe what Mubina would also want to ask you about is that what actually hit the sales volume in the regular segment in Andhra Pradesh and West Bengal? What were the problems that actually, what are the problems that you're actually facing in these slow-moving markets?
Yeah, so there are two different situations, really. West Bengal, we saw adverse regulatory decisions where the selling price for our brands went up discontinuously. So there were two big jumps to consumer price. The first was the COVID tax, which most other states have now negated and rolled back. West Bengal did not do that. And on top of that, they had a new excise policy, which further added taxes and therefore made many of our brands really far less affordable than they were earlier. And that is what impacted not just our popular brands, so to speak, but actually even our prestige and above brands in the state of West Bengal. As far as Andhra is concerned, we've had a challenge over the last year where we aren't able to do business in the state of Andhra Pradesh because they have a route to market model there where we are not able to do business as per the rules with which we do business. So that's the real challenge that we have in the state of Andhra Pradesh. We're obviously engaging with the government to see what best we can do to re-enter the market, but pretty much our sales in Andhra Pradesh have come down to next to nothing.
Okay. Mr. Kripalu, I wanted to ask you about your debt. Another pleasant surprise of there, you managed a massive debt reduction drive, and that too in a tough year. FY21 was undoubtedly, I think, one of the toughest years you've seen in a very long time, like you mentioned, in most of your very long career. So how exactly did that come about? What helped you in this debt reduction? And what's the plan on deleveraging in FY22, or do you think you're comfortable with this debt level now?
So I'm absolutely delighted with our cash performance and the levels to which our debt are now. I mean, we started this journey when I came, soon after I joined, the debt levels were over 8,000 crores, right? And now we are just over 500 crores. So it's been an enormous journey, and it's not just about one quarter. It's about how we have driven the importance of cash in our business, monetizing a large number of non-productive assets, which we have done, and then driving efficiency between stock levels and receivables, and also working with state governments to change the amount of excise duty that you have to pay in advance. So a combination of all of this has really brought us down to these, I would say, very, very good levels in terms of debt and cash. Looking ahead to your question, I think there is scope for some improvement, but I think now it will be more about continuous improvement rather than discontinuous improvement. We still have some non-core assets to sell, and that's going to help us, and we will continue improving working capital and improving that just in terms of management productivity.
All right, so with some more non-core assets to sell, I suppose we can look forward to some more debt reduction and better cash flow as well. Mr. Kripalu, we leave it at that. Once again, really appreciate you taking our time from your busy schedule and speaking with us on ET Now, and congratulations on a great quarter for United Spirits.
Thank you very much for having me.